Good morning. Welcome to Financial Accounting video lecture. It is not, the video is not 100% substitute for classroom. Okay, we have to be patient to understand the process of passing journal entries. Remember, so few people are having little bit knowledge about debit credit. People are not having what is debit, what is credit. And few are very enthusiastic to understand this. Few people will take light. But the video is video itself. Okay? I will try to explain the process of passing journal entries. So at a time you may not understand. Hope you will go for a second review for understanding. But it is this video will be help us to repeat the video again and again to understand the process, which is not possible in classroom. Okay, students. So 19th problem, earlier video we completed 18th problem. Now we are going to do 19th problem. Look at the transactions. 19th problem, Jan 2016 July, business started with cash rupees 1 lakh. Business started with rupees 1 lakh. So, according to the business entity concept, Hari and Sons are different and business is different. So, amount was brought into Hari and Sons business. Hari and Sons brought cash into business. Business is getting cash. Cash is real account. What comes in will be debit. And capital is Hari and Sons capital. That's why it is. Hari and Sons are contributing money. They are giver. Their account is credit. Okay. Next, on the same day, amount is deposited into bank. Amount is deposited into bank. One is cash account. Another one is bank account. Okay. Cash is real account. Bank also real account. And cash is going out from business. Cash is going out from business. And bank is getting cash. In the bank, cash is coming in. So, according to the real account, what comes in will be debit. And according to the real account, what goes out will be credit. So, according to this, we have to debit cash account data to bank account and to be credited. Cash account, bank account data, bank is debited, bank account data to cash account. Amount is 60,000. It is 60,000 cash deposited into bank. Cash deposited into. Okay. Next entry. These are available. Problems are available in WhatsApp. Okay, you can see that. Machinery purchased from A on credit. What we purchased? Machinery. What we purchased? Machinery. And from whom it is purchased? Mr. A. We are getting machinery is real account. Machinery is a real account. According to the real account, what comes in will be debit. And A is a giver. We are getting machinery from A. So that's why giver is credited. Giver is a credited. So the entry will be machinery account data. Machinery account data to A account. Machinery account data to A account. A account. Amount is 20,000. Narration will be machinery purchased on credit. On credit. Okay. Next transaction. Next date is on 5th. Furniture purchased from B for cash. Earlier, machinery is purchased from A, and 5th date also furniture purchased from B, but for cash. So we are getting furniture, we are paying cash. Furniture is real account, and cash is also cash, also real account. Cash also real account. Okay, earlier I didn't change to personal account. Okay, so furniture is coming in debit and cash is going out. Will be credit. Now the entry will be furniture account data. Furniture to be debited na? Furniture account data to cash account. Why we were not recorded B? Because we paid cash. So there is not necessary to record B. Here only two accounts are affecting. One is furniture, another one is cash. On second, furniture is purchased from A. It is not a cash transaction, it is credit transaction. That's why we have to record on the name of A. So, furniture account data to cash account, amount is 10,000. And furniture purchased for cash. Furniture purchased for cash. Okay, right. Next, goods sold to Y. What we sold? Goods. So goods are coming in or going out. We sold goods now. Goods is nothing but a sales. Real account. Goods are real account going out. And these goods are sold to Y. Sold to Y. So here we have to record the name of Y. Y is a personal account. Y is personal account. And Y is receiving goods. We sold goods. Y is receiving goods. Receiver. Receiver will be debited. Now the entry is Y account data to sales account. Y account data to sales account. Whenever goods sold, we are recording goods as a sales. Okay, goods sold on credit. Next, amount I will change. It is 9,000. 9,000. Okay. Next entry is goods returned goods returned by Y. So goods returned by Y. Y as it is personal account, and here sales returns. Sales returns. Why returned goods? Sales returns. Why returned goods? So we are getting goods. Goods are coming into our business. Comes in. Comes in will be debit. Shortcut I am writing. Try to understand. Next problem, there were no analysis. And here Y is giver. He found our sales or goods sold to him is defective and he returned back. Suppose you purchased goods from Amazon, you are returning back. So for Amazon, it is sales returns. For you, it is purchase. So giver is credited and goods are debited. Here the goods are sales returns. Sales returns account return. Sales returns account return. To Y account. Entry will be sales returns account data to Y account. Goods returned by Y. Amount is 1000. Okay. Next entry. Next 12th date, no analysis. Goods sold for cash. What we sold? Goods. When we sold goods, goods are going out or coming in? Going out. What goes out to be? Credit. What goes out to be? Credit. So I have to credit sales. Sales account. And these goods are sold for cash. When I sold goods for cash, I am getting cash. Cash is coming in. Cash is debited. Cash is debited. So now the entry is cash account data to sales account. Cash account data to sales account. Why cash is debited? Because I sold goods. I sold goods for cash and I am getting cash. I'm getting cash. And why sales are credited? My goods are going out. Goods are going out. So according to the real account, what goes out will be credited. Goods sold for cash. Okay. 15th date. Purchased goods for cash. Sales always credit, purchases always debit. Why purchase are debit? Because goods are coming. Goods are coming. So purchases account return. Purchases account return to cash account. To cash. Okay. Purchase account return to cash. Why cash is credited? Can you remember? Cash is which type of account? Real account. What are the rules of real account? What comes in debit? What goes out? Credit. What comes in debit? What goes out? Credit. Okay. So cash is going out. That's why cash is going out. That's why credit amount is 10,000. Amount is 10. Next entry, cash received from Y. Y is giver or receiver? What do we receive? Cash. What do we receive? Cash. From whom we receive? Y. From whom we receive? Y. What we receive? Cash. Cash is coming in or going out? Coming in. What comes in will be debited. That's why cash is debited and Y is giver. Giver is credited. Y account. Y is which type of account? Personal account. What are the rules of personal account? Receiver will be debited and giver is credited. Cash received from Y. Okay? Next date, 20 date. 20 days. Cash paid to X. Cash paid to X. What we paid? Cash. Cash is which type of account? Real account. Cash is which type of account? Real account. So cash is going out or coming in? Going out. What goes out will be credited. That's why cash is credited. To whom we paid? X. X is which type of account? Personal account. X is receiver or giver? Receiver. Receiver will be debited. Receiver will be, entry will be X account data to cash account. X account data to cash account. Cash withdrawn from bank. What we withdrawn? Cash. When we withdrawn cash from bank, cash is coming into business or not? Yes. So cash is coming in and bank is losing benefit. Cash account data to bank account. Please check with the second entry. It is reverse. When we deposited bank account data to cash, when we withdrawn bank cash account data to bank account. Narration is and cash withdrawn from bank. If it is mentioned cash withdrawn from bank for office use, same entry. Because cash is withdrawn from bank and bringing into business. Cash withdrawn from bank. Okay, right. Next entry. Next entry is advertisement expenses. All expenses or expenses, losses, incomes and gains are nominal account. According to the nominal account, two rules are there. One is the expenses and losses debit, incomes and gains credit. It is very clear on 28th advertisement expenses. So we have to debit advertisement. Now the entry will be advertisement account data. When I paid advertisement expenses, I am giving cash. I am giving cash to either TV9 or some anybody itself. Okay, so that's why advertisement expenses are advertisement account data to cash account. The entry, that's the entry. Amount is 5,000. Amount is 5,000. Narration is advertisement expenses paid in cash. Or we can write advertisement expenses paid in cash. Okay. Next entry, paid rent. Office stationery purchased for 2,000. Office stationery also expense. Okay. So that's why entry is stationary account data to stationary account data. Data to cash account. I can write stationary expenses paid in cash. Okay. Next entry, rent accounted, rent paid, rent paid. So rent account data to cash account. Same. Rent also expense. So according to the nominal account, all expenses debit, all incomes are credit. Rent paid in cash. Rent paid in cash. Okay. Next, cash withdrawn from bank for the personal use of the proprietor. Personal use, whenever you find personal use, directly you can write it as a word called drawings. Drawings, the meaning is used for personal. Used for personal. Okay. Look at the 25th date, cash withdrawn from bank for office use. It was not mentioned office use, but it is for office use. And here it is used for withdrawn from bank for which use? Personal use. Now the entry will be drawings account data. Drawings account data to bank. Amount is 2,500. Narration is amount withdrawn from bank. Bank for personal use. So whenever we found personal, it is treated as a drawing. Is it treated as drawing? Okay, students. Hope it is very clearly, very neatly available on MS Word. You can understand very well. Whenever there is a problem in understanding why it is debited, why it is credited, remember the rules. And whenever the rules are getting confused, try to understand type of the. How many types of accounts are there? 3 types. What are they? What are they? Personal, real, nominal. Personal, real, nominal. So whenever you thought that if it is a personal account, remember the rule for personal account. What is the rule for personal account? What debits? What? Personal account. Debit the receiver, credit the giver. Debit the receiver, credit the giver. Okay? Right, students. Bye. Take care.